Right now, today, Credit Suisse is collapsing. I'm going to break down everything that you need to know in this one video and why that is the case. Credit Suisse is a global systemically important bank. We're talking about a multinational organization that has a lot of power, a lot of sway, and in this video you're going to understand why this has all been taking place. It connects in with SVB and of course what the central banks have been doing. They've been increasing interest rates, and I've been telling you, I've been warning you all along that this is going to cause major shockwaves, and here we are today. We are watching many banks around the world dealing with the crisis. Right behind me there, I've got the bank index, and you could see it is falling off a cliff. Let's break it down. You came here for the truth, so let me unveil that for you. Credit Suisse shares tumble to new record low as European banking sector reels. Not just European banks, of course, everywhere. Credit Suisse plunges to fresh all-time low as Saudi National Bank rules out assistance. I'll break that down in just a minute. It is now down 96.7% below its all-time high. That's kind of a big deal. That's kind of a problem. It didn't recover from 2020. It didn't recover from any of the sovereign debt crisis and all these events that happened after the financial crisis, and not to mention the dot-com boom and financial crisis itself, where it has been going lower and lower, despite the fact that it is an absolutely important company when you look at it, internationally. That didn't save it. That didn't make it okay. Right now, it's going down and down and down. And you might say, company still exists. It's down 97% from its high. If you don't call that a collapse, I really don't know what is. But it gets worse. Let me show you, and I'm going to break this down. You got to understand, Credit Suisse shares tank after Saudi backer rules out further assistance. So I watched a little clip of it. Basically, he was asked if they would step in and put more into the company. And basically what the guy said was they can't do that because they only want to have less than 10% of the shares. So if they were to do so, it would be more regulatory problems for them. And they said, no, that's it. So they had to basically get out of this saying, no, we don't want more of this company. That's not where we're at. And what does that signal? Well, they're not willing to take on more. And therefore, it just looks like a lack of confidence essentially. But there's more to it than that. Stock sell-off gained steam on Wednesday as a spreading bank crisis. You're seeing the S&P 500 turning negative for the year during this brief moment. Of course, this is going to happen at a time in which the resolution hasn't come up. People were celebrating. SVB has been bailed out. Let's celebrate. I got so much hate mail because everybody said, hey, look at this, and the stock market went up. Are you crazy? Are you out of your mind? How many influencers started doing videos about the fact that now's the time to buy the dip? You are really running people down and off that cliff, and you should be ashamed of yourself. That's terrible. The crisis hasn't been resolved. When the crisis gets resolved, or at least papered over, then it's a time to maybe say, well, I don't want my money sitting in cash. I'll put it in an investment. But this is ridiculous. And it is truly shameful to see the influencers pushing that, and the comments. I've seen some as well trying to sway people out of that. And my goodness, you've got to be careful. Look at when they're putting out the quantitative easing and when they're reducing interest rates, that's when it's time to get in and start to add to positions. Not when they're in a tightening cycle. Why would you fight against the stream? The S&P 500 turned negative for the year. What are you doing? What are you doing, people? Credit Suisse shares plunge as bank storm spreads to Europe. This is just a comparison of Credit Suisse. You could see that one at the bottom. Deutsche Bank, UBS, BNP, Societe Generale, all of them have been hit recently, of course, because of SVB, because of the bank failures, 3 bank failures in a 5-day period. And then, of course, we said, who's going to be next? And I was talking about this, mentioning Credit Suisse. Of course, I've been talking about Credit Suisse for a while, how they took out, basically the currency swap between the two central banks, Swiss National Bank and the Federal Reserve. They needed a lot of US dollars. Credit Suisse was part of that. Credit Suisse saw something like over $100 billion worth just leave their company I believe it was at the end of last year. I brought all that up to you. So leading up to this point, if you've been a subscriber to the channel, you're not new to Credit Suisse. You probably think, okay, we expected this. But for some people out there, they're not told this information. They're given like all fluff. Let's just throw the fluff out there, but you get the truth. So here we go. Credit Suisse appeals to the Swiss central bank for show of support. Swiss lender tumbles more than 30% after top shareholder rules off further funding, sparking a wider rout. I've been covering that, just trying to highlight, I posted this on my Twitter, just trying to show you the fact that they're going to daddy for some help. Please give me some money, I need it, because they're going to be in big trouble. And they probably will go into a state of receivership, you know, some sort of big quasi bailout. They're not going to let it fail. Let me be clear about this. They're not going to let the companies fail and then the entire financial system collapses and there's anarchy in the streets. No, there's going to be some sort of bailout. All over the world, we're basically seeing a nationalization of the banking system. And if you think that's a good thing, let me tell you, taxpayer bailouts, not a good thing. But the point here is that it is collapsing. That's why they have to go to the central bank. This is a collapse. Are they going to say to you, our company collapsed today, and I just want to let everybody know that this is a collapse. We're going to add it to the dictionary so that when you go to look it up, it says, no, that is absolutely not the case. And they're not going to say that. They're going to say, everything's just fine. Don't worry about it. Don't worry. Everything's just fine. Like they always do. But don't trust them. Don't believe them. And you've got to do your own homework on the subject. Switzerland faces pressures from at least one major government to intervene on Credit Suisse. Now, this is according to a source through Reuters, but the point is, I believe that there's probably more than one, that they're basically just saying, look, we have a systemic failure that is going on today globally. We need to stop this. Credit Suisse is the next big one. In fact, it's much bigger than SVB. So you got to stop it. You got to make this, handle it, whatever the case is. And we'll see what happens. I'm not so sure that they're going to be able to necessarily deal with it, snap of the fingers, but they need to instill some confidence in the market, say, hey, we're going to print some money, we're going to do something, and we'll probably see that in the coming hours. That's why I'm trying to bring this video to you instead of doing important things like my taxes. Okay, so here we have it. You can see the credit default swap. What is a credit default swap? Essentially, think of it like insurance against company failure, or you might think of it as a bet against the company collapsing. They use this against Greece to push that down and create a crisis for them, or worsen the crisis for them. And look at comparing Lehman. So this is the Credit Suisse credit default swap, okay? Comparing where it was during the Lehman crisis, which was crazy at that time, to what we're seeing now. It isn't even close. That looks like a little bump in the road in comparison. The company looks more risky today than it did during the financial crisis, during the sovereign debt crisis of Europe a few years ago. That's probably not a good sign. He's just basically just saying the markets are now pricing in a probability of default of 47% for Credit Suisse. Unbelievable. And part of the problem here is that they were offering, these are 3-month rates comparing the different companies, okay? You got 5%, 5.2, 5.25. Credit Suisse was offering for 3-month rates 6.5%, minimum $5 million. Okay, these are all the big accounts here. And if you're going to offer 6.5%, how are you going to get that yield unless you take some risk? So they have some fundamental problems right now that they're promising stuff for their clients and they cannot deliver. There's more to this than that. They saw huge outflows, all these different things. They're trying to retain their clients. They're trying to retain that and trying to prevent the outflows. And so they're offering these really good returns. And that's great. That's fantastic. But how can you get those returns? That's the challenge. That's what they're running into right now, among so many other problems. And then this is just, I was laughing, I was upset, I was everything. Why almost everyone in Washington is ticked at the Fed. If you read through it, they're trying to say that, you know what, the government, that is, the US government saying, you know what, this could have been prevented, this could have been dealt with, and it's the Federal Reserve's problem. It's the Federal Reserve. They weren't watching. They weren't making sure everything's okay. If you, for a second, don't believe that the government, the Federal Reserve, and the banking establishment aren't all one in the same, you literally just need to spend 10 minutes looking it up and you're going to find out, oh, they are the same. This is so key and so important to watch and look at the maneuvers that they do. You've ever heard the revolving door before? You watch one guy go from the Federal Reserve, then he's working at Credit Suisse, then he's working at UBS, and then he's working in a position of, anti-money laundering in the government and all these like different things. And they just keep going around these different positions. And it's wild because people don't realize where we are at today. This is a banking crisis and it will be resolved. There's no worries about that, but it's going to be resolved by taking excessive action, which will ultimately lead to higher levels of inflation. And you, my friends, you have to pay the price. So it is very important to watch what you have, to watch what you are holding on to, your assets, to hold things that are tangible and real versus that which is fake and phony. We are not in the same world we were just a little while ago. Get your stuff in order. If you want any information from me directly, you can always contact me. I'm always here to reply. Please let me know. I'm going to be here day after day. See you tomorrow.